So let's turn to Guido Clary, who's head of Slovenia and the Western Balkans unit, lending operations at the European Investment Bank. Good morning.
Good morning, Joanna, and thanks for this invitation from Economist for this event. Actually, I have to say that we very much share Mr. Zavos and Van Kadidis' view that banks can be indeed the solution of the problem in this case. As the European Investment Bank, we are the investment bank of the European Union, and we have structured collaboration with banks and financial institutions very much instrumental to long-term investment projects, particularly for SMEs. Just to give you an idea, in 2019 we financed 7.3 billion budget, of which 8.8 billion outside of the European Union. Now, after 3 months of lockdown and strong policy intervention, we see that half of European Union and accession countries' firms face severe liquidity fall. Adding to the lockdown period, the subsequent recovery process might, we believe, lead to a cumulative gap in net corporate news in the range of 1.9 to 3.4 trillion. And to compensate for this decline, firms will have to change their mid strategies, facing a hard trade-off between medium to long-term business prospects, therefore requiring more investment, or financial stability, and implying lower leverage. They can either try to preserve investment at the cost of higher leverage, potentially exposing themselves to solvency issue, or prevent substantial leverage increases by cutting investment. Now, with share of policy intervention being in the form of public guarantee schemes, firms will continue to have access to credit and thus leverage. On the one hand, through of weaker activity on NPL ratios will be lower for banks and higher for the guarantor, the sovereign. Now, let me focus on South and Eastern Europe, and particularly on the Western Balkans. We, as European Investment Bank, we conduct periodical basis a bank lending survey, and I wish to share with you some of the key findings of this survey. First, demand for loans continued to increase last 6 months. Prior to COVID-19 affecting the region, banks were expecting an increase in demand in line with the recent past, while post-19 expectations changed sharply and are standing in a contractionary area for the very first time in the past 6 years. Second, supply condition is slightly over the past 6 months, in line with expectation recorded in the last quarter year. The COVID-19 induced crisis is expected to have a significant negative impact on supply condition over the next months, and therefore determining a sharp tightening across the client spectrum. Third, NPL ratios continue to improve, although less than earlier in the cycle over the past 6 months. Now, this positive trend is expected to rise dramatically in the post-COVID-19 crisis environment, whereby the vast majority of banks expect ratios to increase. Now, just allow me to give a short description of European bank response, particularly in the Western Balkans. Despite the immense challenge created by the COVID-19 crisis, in the European Union itself, the European Union and the European Commission has shown through its Team Europe initiative real support for the Western Balkans. As part of this EU-led Team Europe initiative, the European Commission has announced 0.3 billion COVID-19 support package for the region, and of which the European Investment Bank contributes more than 50%. What we are doing, we are accelerating disbursement and ramping up our support for the healthcare and SME sectors for 450 euro. We are developing regional financial facilities for both the public and the private sector, which are currently addressing urgent needs, and they are looking beyond the immediate crisis. And above all, we are building a pipeline of investment that will improve the socio-economic condition in the region. A new euro 500 million regional facility will address urgent needs in the public sector, including the healthcare systems and other activities linked to the outbreak of the disease. This facility can also be used by the public sector to support the economic recovery, with a particular emphasis on small banks and credit guarantee schemes. Private sector is another important priority. The process of accelerating disbursement of funds and widening eligibility criteria for EIB financing disbursed through the banking sector. A new 400 million regional facility financing particularly SMEs through financial institution will reach out as many companies as possible. Now, the purpose of this facility is to support immediate liquidity needs and address investment constraints of SMEs and mid-caps, which are indeed the most affected by the COVID-19 outbreak. Thank you.
Thank you very much. Thank you, Mr. Clary.